Well, we're getting to the end of the best 6 months. April's the last month of the best 6 months. Most of the things in our portfolios are looking pretty green. It's not a lot of red there. That gets us concerned, a little walking on water there. But this jobs report tomorrow, April jobs report has...
Tomorrow, today.
Excuse me, I'm thinking of his last...
I know it's early, Jeff, but come on.
I'm sorry.
It's all...
It's early.
I got to give you a little business at this hour.
Of course, of course. It's usually, it's been a weekday for the market for the April jobs report. It tends to disappoint. Market was down the past couple of years, about 50% up or down across the different indices. So
on the April jobs number.
On the April jobs number, which is March's number, but we're shifting a little bit from a leveraged long position to just straight 1x for the market right now with our strategy. But
so you're not overly. In other words, you were overly bullish. You're willing to tie on a little leverage. Now it's just we think the market's going to go up. Put some money down, but let's not get crazy.
April's a strong month. It's the biggest month for the Dow. It's a big month in pre-election years. We've got positive indications out of our early January indicators. The numbers are still pretty decent. Growth is slowing a bit. Dovish Fed, as you said. China looks like there's something going on there. Brexit, the can kick. Eventually, they're going to have to do something there. One way or another.
Well, they're voting every day
democracy on display.
Stuff, yeah.
Right. It's pretty
But I
easy.
love having you on because you've got this great historical perspective that
Sure.
a lot of people don't have. And talk to us about the third year of a presidential, we're in the third year of the Trump administration. We're entering the second quarter. This is historically, I believe, reading the Stock Traders Almanac, kind of the sweet spot.
Not only is the third year the sweet spot, but the 3 quarters, the fourth quarter, which was horrible, and the first 2 quarters of the pre-election year is the sweet spot of the 4-year cycle. The third year, as the president ramps up, trying to stay elected or keep his party in office, tends to be the best year for the market. It has been up about 15% for the Dow, even more like 28%.
Because a lot of people promising a lot of things.
Well, they're starting to get away from the unsavory policy initiatives that they tried to push through in the first 2 years and get things that are a little more palatable to the country and the market and everything, and tends to drive the market higher. And they prime the pump is the old saying. But 4-year cycle with the constant campaigning going on is maybe in flux a little bit, and we're looking.
Yeah, but I think December threw everybody for a loop. I mean, it was such an outlier month. I mean, and
there were some technical things that happened there too. I mean, the Dow theory sell signal, the death cross. We didn't really pay attention to that because there was such rampant selling and it was such a volatile bottom type selling action. We see the capitulation there, but we do have the positive Dow theory right here. Buy signal, we've got a golden cross, which is the 50-day moving average crossing above the 200-day on the Dow.
We highlighted that the other day.
Which is much more bullish. We've done our research on that, where the death cross usually happens around the bottom, but the golden cross is usually indication of further things.
But from the death cross to the golden cross, maybe we need a little southern cross by Crosby, Stills, Nash. Who knows? How much optimism? The transports. Right. You mentioned Dow. Transports have been red hot. I don't know, guys, if we could put up the Dow Transportation Index. This has been hot. How much sort of, I don't know, intrigue are you placing on the transports? You think it really means something here?
I think it's another confirming indication. I think the advanced decline line is more important right now. You see the broad participation in the NYSE advanced decline line making new highs, trending higher as the market's pushing on that last level of resistance before the old highs. If the market doesn't react too negatively to what we expect might be a disappointing jobs report today and any other economic numbers this month, I think we could rally to new highs and probably bounce off of that over the weak summer months. But for now, we're still,
still optimistic.
Still optimistic.